Will $100,000 into SCHD be better than maybe your full-time job? In today's video, we're going to talk about the capital appreciation, we're going to talk about the dividend growth yield, and we're also going to talk about the yield of SCHD. And we're going to see if maybe if you invested $100,000 into SCHD, could you retire or could it be better than your full-time job? Hey guys, my name is Steve, and I run the Frugal Expat website where we try to help people to save more and invest better. Today we're talking about SCHD and seeing if $100,000 in SCHD will be better than your full-time job. If you like this content, make sure to hit that like button and subscribe below, and we'll continue to create great content to help you do better. Now, one of the things I like about SCHD is it's got a great dividend growth rate, which is about 11.59% over the last 5 years. It has also grown its dividend 11% over the last 10 years. Now, this ETF has been around since 2011, October 2011, and between 2012 and 2022, it did much better than the S&P 500. Now, most people are thinking, this is a great ETF because it's beating the S&P 500. Now, the last couple years, the S&P 500 has been doing much better. That's because of the Mag 7 stocks that are helping it to grow and boost. Now, one of the reasons I like SCHD is also the dividend yield. The dividend yield has been averaging around 3.5%, 3.6% over the last couple years. And that's great news. If we look at other dividend ETFs like DGRO or VYM or even FDVV, we can see that SCHD is beating these dividend yields. DGRO has a dividend yield of 2.17%. FDVV has a dividend yield of about 2.86%, and VYM has a dividend yield of like 2.7%. Now, if we're looking at dividend yield, SCHD's dividend yield is much better and towering over these. Now, if you're looking for dividends and you're looking for kind of that yield and income, SCHD just makes sense. Now let's just take a look about why most people look at SCHD and kind of what the yield is, the growth rate, and the fundamentals to make it such a great ETF to start off with. So let's get down to some of the fundamentals. Now, if we're looking at kind of the fundamentals of this ETF, we can see that it tracks the Dow Jones US 100 Equity Index. It also has a straightforward low-cost fund offering some potential tax efficiency. The fund can serve as a part of a core complement to your diversified portfolio. So if you have like a core holding like VOO, or you have maybe a growth ETF like SCHG or VGT or QQQ, you can add these to SCHD and make a great portfolio. And invest in stocks selected for fundamental strength relative to peers. And so this is a great ETF holding about 100 different blue chip stocks to help keep your portfolio stable. So that's good news for you. If you want stability, SCHD is going to give you that value and stability. And if you're looking at ETFs like maybe VOO or VTI, it's been propelled by those growth stocks. And so SCHD just provides a little bit more stability and a little bit more value. And if those growth stocks do crash and burn, well, at least we have SCHD. You can see that in 2022. When the market went down about 19%, SCHD only went down about 45%. That's good news for you because you don't want all your money to go crashing and burning if you are into retirement. So this is a great ETF to hold if you are going into retirement or getting close to those retirement years. So that's a good news for you. Now let's take a look at the performance over the long term compared to the S&P 500. Now we take a look and we got the 1 year comparison. 1 year may not be as good compared to the S&P 500. Like I said, the Mag 7 has done pretty well. But if we look towards the 5 years, it's a little bit on par. 10 years, we get a little bit closer, and if we look at the inception of SCHD, we will see that it's done quite on par with the S&P 500. And that overall return is, as you can see, if we go all the way to 2022, both the S&P 500 and SCHD has been kind of on track to the same. Now, in the last couple years, the Mag 7 has really propelled the S&P 500, but still, the SCHD is still doing pretty well. It's averaging about 11% per year for the last 10 years, and that's great news. It may not be that 13-14% the S&P 500 is, but we're looking for a value, good dividend ETF that's going to provide you dividends for your retirement. Now, if we look at performance over the long term, now it has done about 11% per year, but if we get conservative and do about 10% of that $100,000 for maybe the next 20 or 30 years, if we look at it 30 years, it's going to come out to be about $1.983 million. That's great news to you because, I mean, if we're looking for some good dividend income at about 3.5% on that $1.9 million, it's going to come out to be around $69,000, a little bit more, a little bit less. It depends on how the market goes up and down. So that's good news for you. So if we're going to continue to invest for 30 years, you know, that's going to be great news because it's going to continue to grow and grow and grow. Now, that's not where the great part about SCHD is. It's going to be about the dividend growth rate. Now, like I said, the dividend growth rate has been growing year upon year. And if we take a look at Seeking Alpha, Seeking Alpha's got some great information about SCHD's dividend growth rate. So let's take a look. Now, Seeking Alpha is going to give SCHD an A+ for their dividend growth, and it's going to give it a B- for their yield and a B- for their growth rate for the trailing 12 months. But as you can see, the 5 years, 11.5%, the 10 years, 11%. It's been paying a dividend for 13 years and growing it for 13 years straight. That's amazing news. Now, if we take a look at the dividend growth as it's gone on for the last at least 10 years, I mean, you can see it goes from 38 cents in 2015 all the way to about $1 in 2024, and that's just growing it year upon year. And you can even take a look at the dividend growth as it's gone through the years. I mean, most years are in double digits past that 10%. Some years has a little bit less, and then the last 5 or 6 years, you've seen close to 20%, 17%, 11%, 14%, and it just goes on and on. That's great news because it is a good dividend ETF that's going to grow its dividend yield year upon year. Now, if we're taking a look at some of the other parts of this dividend holdings, we have some great holdings that make this ETF just amazing. I mean, you've got about 18% in financials, you've got healthcare, consumer defensive, energy, industrials, and consumer cyclical. These are just great industries and sectors to be part of this ETF. Now, not only do you have just like 2 or 3 above 10%, you've got about 7 different sectors that are above 10%, making this a well-diversified ETF. Now, the top holdings are going to be AbbVie, you got Coca-Cola, Home Depot, BlackRock, you got Chevron, and you've got Verizon. Now, these are some great companies, and we just saw that Coca-Cola came out with some of their earnings, and it's bypassing some of the earnings that people actually expected, which is good news for investors. Now, that means Coca-Cola could increase its dividend around 10 to 11%, or maybe not, but we shall see coming up in these next couple days, coming up these next couple weeks. So, who should actually get into SCHD? Well, that's a couple of different people. First of all, you got those that are looking to make a dividend portfolio simpler. So instead of holding like 5, 10, 20 different dividend companies, you are now just holding one ETF. So you're making it simpler. You can live off those dividends. That's the number 2. People are looking for dividend income to live off in their retirement. Those people that are getting closer to retirement may want to have a dividend portfolio, and this one dividend ETF makes that the case. You're looking at a dividend ETF to pair with some other ETFs like maybe VOO or even SCHD. There are so many people in my comments saying they have SCHD and SCHG as a 2-fund portfolio, and it's performed amazingly over the last couple years. So this could be a great ETF to join some of those other portfolios. You know, people are looking for this for lower risk and even just looking for a good value fund. So these are some couple reasons why people may be looking at this dividend ETF. Now, if we really want to make sure that this is going to be the dividend ETF to hold us all the way to retirement, we're going to use a calculator to see how much dividend income it's going to hold for us in the next 10, 15, 20 years. How much how much money we could be putting into it, and what the calculator says at the end. So let's take a look at our calculator. Now, I took this calculator from themarketbeat.com and I just inputted some information that I got from Seeking Alpha. First of all, we're going to start off with a principal of $100,000 and we're going to have a tax rate of 15%. Now, I just put an SCHD in, so it filled in some of these things like the dividend yield would be 3.37%, and then I put in maybe it's going to grow about 11%. I'm being conservative, and maybe the price is going to only increase by 7%. So we're going to invest for 22 years because I like the number, because it just gives us a little bit extra years than 20 years and a little bit less than 30 years. You know, I'm getting close to 40, and so I'm trying to think what would that dividend income be when I hit maybe 60, maybe when I hit 65. So let's take a look at these numbers. So if we have $100,000 and we're trying to invest for the future, when we hit 20 years down the line, that 20 years is going to give us an annual dividend income of $51,644. That's amazing news. That is almost hitting how much the average person is making year upon year. Well, the average person is making around $66,000 per year, and so if you want to get close to that, we should be investing maybe 21 to 22 years. At 21 years, the annual dividend is going to be about $60,543. And at 22 years, it's going to be $71,121. So if you just invest for the next 20 years, you could be replacing your job. And that's great, because if we're looking at maybe getting some Social Security, maybe some other income from some of our other investments, or if we continue to invest into SCHD, we can make this annual dividend even higher. And that's good news for you. So if you're looking to retire, start now. Start investing into either SCHD or into something else and grow that until the point where it replaces your job. And like I said, $100,000 into SCHD in a 20-year time horizon will get you to over the amount of money you're getting paid at your job today. So if you're looking for more dividend income, dividend investment, or investing into ETF, come follow me, subscribe to my channel, and continue to learn. And let me know in the comments, do you own SCHD? How many shares of SCHD do you own? All right, I'll see you later in the next video.